Hello everyone, this is Victor here. Welcome back to the Intelligent Investor channel. Several subscribers asked me to analyze Sofi stock to see if it will recover even more going forward after seeing the stock soaring over 100% year to date this year. If you follow Sofi stock, you will know that Sofi was one of the most exciting hypergrowth stocks in 2021 when it went public through a SPAC merger. Many investors bought Sofi stock right after it went public because they believed that Sofi would eventually grow 10x, 20x or even more. Many investors believe that Sofi would disrupt many traditional banks and attract many high-income professional customers. I always say this, past performance does not guarantee future results. If you bought into the fintech hype and if you bought Sofi stock right after it went public, you will see that Sofi stock is still down as much as 60%. However, if you time it right and bought Sofi earlier this year, you will see that Sofi stock has soared well over 100% year to date. As a long-term investor, I don't like to speculate on stocks. Instead, I like to invest in the best businesses that are undervalued now. Also, I like to invest for the long term instead of trading stocks. So in this video, I'm going to analyze Sofi stock to see if it's a great fintech company for long-term investing. I will talk about these topics in this video. First, I will give you a quick stock portfolio update. Then I will talk about Sofi stock's biggest risks. Does Sofi have any competitive advantage? Will Sofi stock grow 10x or even more? Sofi stock valuation, and will I buy Sofi stock? If you like this video, make sure to hit the like button, subscribe and turn on the notification button. I will continue to make many excellent stock reviews and investing videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members grow their stock portfolios to over 7 figures over time. Once you become a Patreon member, you can follow all the stocks I'm investing for the long term and download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued or overvalued now. Also, you have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about Sofi stock, I want to give you a quick stock portfolio update first. This is one of my personal growth stock portfolios. I also have other portfolios with almost the same stocks and the same investing strategy. This growth stock portfolio has done very well because I have invested in some of the best businesses that have great competitive advantage, large economic moats, great products and services, great management, high return on invested capital, increasing earnings and increasing free cash flows over time. There are several multi-bagger stocks in this portfolio here. For example, Apple is already a 10-bagger stock here. This year, I started new positions in several stocks. I bought American Express, Intuit Inc., PayPal, and S&P Global Inc. this year. I think they're wonderful businesses. More importantly, I bought them when they were undervalued before. So this is why these new positions are making money already. This portfolio mainly invests in the best businesses that are undervalued. This is why this portfolio is beating the S&P 500 by a large margin. Another reason this portfolio is beating the S&P 500 is that I have invested in Apple, Microsoft, Alphabet, Amazon, and Tesla. As of now, the Nasdaq 100 index is dominated by the 7 largest tech companies, also known as the Magnificent 7. They are Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, and Meta. The Nasdaq 100 is planning to rebalance them because these 7 companies have grown too big. As of now, the Magnificent 7 stocks account for 55% of the entire index. The Nasdaq 100 will reduce the weighting of these companies. Other ETFs and funds that track the Nasdaq 100 will also reduce their investments in these companies. This means these Magnificent 7 companies will likely have more corrections, at least for the short term. Personally, I will continue to invest in them as long as they are outstanding businesses. I like to buy them only when their stocks are below their intrinsic business values. Also, I like to invest in them for the long term, so their intrinsic business values can grow substantially over time. So what are Sofi's biggest risks going forward? The first biggest risk is this: Sofi is still not a profitable bank yet. If you're an investor, it would not make sense to invest in a bank that's not profitable yet. The bank will eventually need to make consistent profits and eventually pay dividends to shareholders. Otherwise, if the bank keeps losing money every quarter, it will eventually lose investors' confidence, lose customer deposits, and go bankrupt. Do you remember the Silicon Valley Bank? Here's the deal, if you're investing in Sofi, you're essentially betting that Sofi may eventually become a much larger bank and become much more profitable later on. Here you can see Sofi has had operating losses for many quarters already. Sofi has been reducing its operating losses for several quarters already. According to management, Sofi is aiming to achieve its first positive GAAP net income in the fourth quarter of 2023. This is very important because it indicates that Sofi will eventually achieve positive GAAP net income going forward in 2024 or later. For Sofi to become a profitable business, Sofi will need to grow several important metrics every quarter. First, the number of members every quarter, or the number of active members using Sofi's products and services every quarter. Second, product growth, or the number of financial products used by each member. Within products, Sofi makes the most revenue from student loans and personal loans. In addition to lending products, Sofi wants to be the one-stop shop for all its members. This is why Sofi is expanding to more financial services such as checking and savings accounts, credit cards, investment accounts for stock trading and cryptocurrency trading, insurance products, and other financial planning services. Sofi has 3 business segments: lending segment, technology platform segment, and financial services segment. I said this earlier, the lending business segment is most important because Sofi earns the most revenue and contribution profits from giving student loans and personal loans to its members. According to the latest financials here, you can see Sofi's lending business is mainly driven by student loans and personal loans. Here you can see Sofi's student loan business has been impacted a lot in recent years since the pandemic started. This is because the Biden administration has allowed students to temporarily pass their student loan payments until September 2023. Going forward, Sofi's student loan business will likely recover a lot because millions of Americans will start paying their student loans again later this year. I believe this will increase the demand for Sofi's private student loans and student loan refinance. In comparison, Sofi's mortgage business is much smaller. This suggests that Sofi's future growth will still be mainly dependent on student loan growth and personal loan growth, and not so much on mortgage. Typically, most clients still get the mortgage through traditional banks or regional banks that have physical locations. This is because they need more financial advice, and they trust the local banks and the largest banks much more than the online-only banks. Sofi offers all its services online and does not have any physical branch. This is why I don't think Sofi's mortgage business will be a large revenue contributor going forward. At the time of making this video, Sofi's lending business earns the biggest contribution profit every quarter. In comparison, Sofi's technology platform earns a very small contribution profit, and financial services platform does not have a positive contribution profit yet. Sofi's financial services platform offers banking services such as Sofi money accounts, investment accounts, credit cards, insurance, and financial planning services. Sofi's management expects that Sofi's financial services platform will eventually be profitable once each member uses more products. All these financials suggest that Sofi's growth will still be dependent on its lending business, specifically student loans and personal loans going forward. If you look at adjusted EBITDA here, you may think that Sofi is a profitable business, but this is very misleading. Many hyper-growth companies that are not profitable yet often use adjusted EBITDA to make their earnings look better each quarter. For example, like most hyper-growth companies that are not profitable yet, Sofi often uses adjusted EBITDA and adjusted EBITDA margin to make its numbers look better each quarter. At the top, you can see Sofi had a large GAAP net loss here. Then, after adding back the very large stock-based compensations and non-cash depreciation and amortizations, you can see Sofi reported a positive adjusted EBITDA here. Again, I think this is very misleading. For example, if Sofi pays each employee cash only and no stock-based compensations every quarter, Sofi would report much larger net losses every quarter. Sofi gave this guidance. Sofi expects that its 2023 adjusted EBITDA margin will be 14% in 2023. Again, I believe adjusted EBITDA and adjusted EBITDA margin can be very misleading for investors who don't understand accounting. In my view, I think it's much better to focus on Sofi's GAAP operating income and operating margin going forward, and not adjusted EBITDA. The second biggest risk we should consider is Sofi's diluted shares outstanding. If Sofi continues to have operating losses every quarter and needs to raise cash to acquire other companies later on, Sofi will eventually need to issue more shares and dilute existing shareholders, so this is another risk we should consider. For example, Sofi had to issue a lot of shares to buy out Technisys for $1.1 billion in early 2022, which diluted existing shareholders' ownership. I believe the third biggest risk is Sofi's loan portfolio or its credit risk. I said this earlier, Sofi earns the most revenue from student loans and personal loans, and much less revenue from mortgage loans. Here you can see Sofi has the biggest exposure to personal loans and student loans and much less exposure to mortgage loans. Mortgages are secured by homes, so they are generally safer and have lower risk than personal loans and student loans. Personal loans and student loans are generally not secure. This is why mortgages usually have lower rates than most personal loans and most private student loans. I think the biggest credit risk is this. The Fed is planning to raise interest rates more and keep interest rates high for a while to fight inflation. This will likely increase the unemployment rate in the US. Raising interest rates more may force the US into a recession in the upcoming months. If the US economy goes into a recession and if the unemployment rate increases in the upcoming months, I think Sofi's loan portfolio will likely be impacted the most. This is because Sofi has a very large exposure to personal loans and student loans that are not secure. Typically, when the unemployment rate is higher, these personal loans and student loans should have higher delinquency rates and default rates than mortgage loans. Personally, I don't like Sofi's loan portfolio because I think these personal loans and student loans have much higher risk than mortgage loans, especially when the US economy is in a recession. This is from Morningstar. It shows that Sofi does not have a competitive advantage or economic moats yet. In my opinion, I also think that Sofi does not have any competitive advantage or economic moats yet. This is because Sofi offers private student loans and personal loans that are also offered by many other lenders. Sofi's mortgage business is too small and it cannot compete with the much larger traditional banks such as Bank of America and JP Morgan Chase. Sofi's online banking services such as Sofi checking and savings accounts, investment accounts, credit cards, and financial planning services are also offered by many other online banks, traditional banks, and online brokerage. For Sofi to attract more high-income members, especially the younger professionals that earn over $100,000 each year, Sofi has to offer very competitive rewards and rates, which can be easily copied by other competitors such as other online banks and traditional retail banks. In our view, Sofi has identified an unfulfilled product need in the marketplace that could potentially allow the company to build a defensible competitive advantage. The company targets young, high-income individuals that may be underserved by traditional full-service banks. The company operates without physical locations and engages with its clients exclusively through its mobile app and website. Unlike existing digital banks, which generally have narrow product offerings, Sofi has built a broad offering of lending products and financial services that encourage its customers to structure the entirety of their finances around Sofi. Sofi hopes that by acting as a one-stop shop for its customers' finances, it can create powerful cross-selling advantage that will reduce its cost of acquisition and make its existing relationships stickier through implicit switching costs. However, while the company has made good progress towards these goals, it's simply too early to assume Sofi will be successful in building a competitive advantage. The majority of the company's revenue currently comes from its existing student debt refinance and personal loan businesses, neither of which have any sign of a moat. While we're encouraged by the momentum seen in the company's recent results, it has not made enough progress for us to have sufficient confidence that Sofi will be earning returns above its cost of capital 10 years from now. Thus, we assign the company a moat rating. So will Sofi stock grow 10x or more going forward? Obviously, I cannot predict whether Sofi stock will grow 2x, 10x, or even more going forward. If I have to make an educated guess, I think it will be a lot easier for Sofi to grow 2x than 10x going forward. I don't think Sofi can grow 10x or more going forward. There are several reasons. First, as of now, Sofi's most important business is still in student loan refinancing, private student loans, and personal loans. Typically, clients who need personal loans and student loans are not high net worth clients. They may have high incomes and good credits, but they are not high net worth clients. If they have a high net worth, most of them would not need these loans to pay for their schools, consolidate their debts, and pay for personal items. Second, Sofi, in my opinion, does not have any competitive advantage compared to other lenders, online banks, and traditional banks that are offering the same lending and financial services. Third, Sofi is targeting younger professionals that are earning over $100,000 each year that have very good credit scores. Many financial institutions that offer banking services are also targeting the same type of customers, higher income earners, and professionals who also have good credit scores. Sofi has too many competitors such as online banks, traditional banks, online brokerage, and private student loan providers competing for the same customers. At the time of making this video, Sofi's total assets are around $22.5 billion. In comparison, the largest banks in the US such as JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo all have assets well over $1 trillion each. As of now, Sofi is still an online bank that offers all its lending and financial services online. In my opinion, I think Sofi will need to become much more like the traditional banks and have physical branch going forward if Sofi wants to grow much bigger. Offering all its financial services online will not work for high net worth clients and ultra high net worth clients. Based on my experience working in the banking industry for more than 10 years, most high net worth clients prefer to deal with the largest banks that they trust the most and that are physical branch. This is why I don't think Sofi can become a top 10 financial institution in the US by just being an online-only bank targeting high-income professionals with good credit scores. This is my opinion here. For Sofi to grow 10x or more, I think Sofi will need to target high net worth clients and become more like traditional banks going forward. This article is from Barron's. According to Barron's, Sofi's CEO wants to grow Sofi to a top 10 financial firm in the US. Sofi is aiming to become one of the top 10 largest banks in the US and compete with the largest banks such as JP Chase, Bank of America, Wells Fargo, and Citigroup. Again, I don't think Sofi can become a top 10 financial firm in the US by just being an online-only bank and targeting high-income young professionals that have good credits. Sofi CEO said this about Sofi's student loan business and the company's outlook. We were supporters of his relief program. I do agree that it will likely not have a large impact on our members or potential members because their income in many cases will be higher than the forgiveness plan allowed, and the amount of debt that they refinance will be substantially greater than the $10,000 that was being offered. Our outlook for 2023, which we articulated at the end of the first quarter, does factor in a mild recession. We think we have a diversified business that will allow us to achieve really outsized growth versus others. Our core target is what we call high earners, not well served. People that have done very well professionally. Their average income is $100,000 or higher. Our products are going to appeal to more than our core target. They already have, but like most great brands that cross over, if we build a great product for one core group, it will increasingly meet the needs of other core groups. But we're going to stick to our core target just like other successful brands have, and we'll see the benefit of groups of people around that center of mass continue to use our products. But they're designed for that specific demographic and that specific target. We have been on a journey over the last 5 years to be a one-stop shop for all of our members' financial needs. It's really hard to deliver on helping people get their money right if you're just in one product. When we talk about the fact that everything's in place and we're ready to scale, it's that we have that complete product offering. It's mobile first, it's built on our technology largely. In my mind, it's not a matter of when, not if, we become a top 10 financial institution in the country. When it's going to be driven by us continuing to deliver on being a household brand name, on being a trusted partner for our members. I think Sofi's CEO is being too optimistic here. Becoming a top 10 financial institution in the country is extremely hard to achieve. This is because Sofi has to compete with the largest traditional banks such as JP Chase, Bank of America, Citigroup, and Wells Fargo. All these banks have much more capital and total assets than Sofi. Also, most banks have the same goal and same strategy as Sofi, which is to increase the share of the wallet of each customer and be a one-stop shop for all their customers. So Sofi's goal to be a one-stop shop for customers is not new at all in the banking industry. Most banks are trying to achieve the same thing. Sofi's management said this in a recent earnings call. In terms of the outlook going forward, we average roughly about 1.5 products per member. I would expect that ratio to stay very similar over the next 12 to 18 months. Because we're driving really strong member growth. And if you think about the denominator, if it's growing really strong, it's really hard to drive the overall portion of the products divided by the members. And that's not a bad thing. That's actually a good thing because the bigger we make our member base, the bigger we'll make our products adopted by that member base over time. Typically, banks use reward programs, lower banking fees, lower lending rates, higher savings rates, and better banking package to attract more customers and to entice customers to have multiple banking products. Customers with multiple banking products are much stickier than customers with only one banking product. Sofi is only averaging about 1.5 products per member. This shows that Sofi's customers are not very sticky customers. I want to show you Sofi's consensus revenue and EPS growth here. Wall Street analysts forecasted that Sofi's revenue will have fairly high double-digit growth rates over the next several years. Wall Street analysts also forecasted that Sofi will start to have positive earnings per share EPS starting in 2024. I think this assumes that the US will not go into a large recession in 2023 and 2024. I want to show you how to calculate Sofi stock's intrinsic value here, so you know when Sofi stock becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog. The link is in the video description. First, we're not using a discounted DCF model. This is because Sofi is not a profitable business yet. Sofi does not have consistent free cash flows yet. Instead, I'm using these two valuation models here, forward price to sales and price to book valuation, to estimate Sofi's intrinsic business value. According to Skin Alpha, Sofi's consensus revenue is expected to be $2 billion by the end of fiscal 2023 and $2.47 billion by the end of fiscal 2024. I'm using $2.47 billion as the forward revenue here. I'm using a price to sales PS multiple of 3.43 here. I think this is a reasonable PS multiple based on Sofi's historical data since the company went public. Under the 4 price to sales valuation model, Sofi's intrinsic value should be around 8.47 billion for the entire company or around $9 per share. At the time of making this video, Sofi's book value is at 5.23 billion. We have to update the book value here whenever Sofi releases new quarterly earnings. I'm using a price to book PB multiple of 1.39 here. I think this is a reasonable PB multiple based on Sofi's historical data. Under the price to book valuation model, Sofi's intrinsic value should be around 7.28 billion for the entire company or around $8 per share. If we take the average of these two valuation models here, I believe Sofi's intrinsic value should be around $8.47 per share. This means I believe Sofi's stock is overvalued at the time of making this video. Now, just to compare, Morningstar estimated Sofi stock's fair value to be much higher at $14 per share. So will I buy Sofi stock? Personally, I'm not planning to buy Sofi stock even if it has the potential to grow 2x, 10x or more. In my opinion, I think Sofi is a very speculative investment and has a lot of risks. Many investors speculated on Sofi stock mainly because they believe that Sofi could grow 10x or more going forward, regardless of Sofi stock price and whether or not Sofi's business is profitable yet. I don't like to speculate on stocks. I'm also not shorting Sofi stock. I'm just staying away from Sofi because I don't think it's a good business. Good businesses don't go public through a SPAC. When Sofi went public through a SPAC instead of a traditional IPO, it was a huge red flag for me. I don't like Sofi's loan portfolio, which is mainly personal loans and student loans. I think these unsecured loans have much higher risk than mortgage loans that are secured by homes. Sofi's business is not profitable yet. Management likes to use adjusted EBITDA and EBITDA margin, which in my opinion is misleading. Sofi is aiming to become a top 10 financial firm in the US. I don't think Sofi's business has any competitive advantage or economic moats yet. Sofi has to compete with many lenders, online banks and traditional banks in the US that are offering the same lending and financial services. There are many companies that are much more profitable than Sofi. My investing strategy is to invest in the best businesses that are undervalued. I like to invest in the best businesses that have great products and services, great management, large economic moats, high return on invested capital, increasing earnings and increasing free cash flows over time. This is why I have invested in Apple, Microsoft, Alphabet, Amazon and Tesla in my personal gold stock portfolios. In my opinion, they are the best businesses that are most competitive in their industries. It's almost impossible for competitors to copy their products and services. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Research channel, and I will see you in the next video.